part. Okay, Euro USD says short. Pound is saying short still. Okay, let's take a look at Aussie dollar. Now, on Aussie dollar, we had a perfect exhaustion here. This is an exhaustion. Remember this exhaustion that I was telling you about? That's giving you an indication for a reversal. That's what happens. The exhaustion tells you that the market is going to reverse. Opening of the next candle, the market didn't actually go too high too long. It actually came back down, closed, and gave us another exhaustion, taking the market down. Very confusing, right? You don't know what's going on Aussie dollar. So on Aussie dollar, I'm going to put confusion, mess, headache. Okay, I'm going to put all the words that you can possibly call this. I'm not going to swear, but I'm going to put all the words that you would possibly look at this. If you were trading this pair, this is all you would say. Because the trade would not end up going in your favor, even though everything is aligned correctly. Okay? You think there's an exhaustion market is going to go up. It doesn't go up. Why? It's confusing you. They're saying the sound is distorted. Can everyone hear me just fine? I just want to confirm. Okay. So moving on. Okay, so moving on to New Zealand dollar. Okay, perfect exhaustion. Next candle, market moves up, comes back down, and closes. Okay, now long / success. This particular long trade went north, made a touch, and came back down. Okay. You went long at the opening of the next candle on this particular one. Let me clean this up for you guys here. Okay. All right. You saw this exhaustion and you went long. You went long from right around here. Okay. This is the exhaustion candle, which tells you there is a reversal happening. You went long here. The market went up. It touched your resistance line and you made your pips. You exited your pips. So we're going to write that long and a success. Let's take a look at Euro Yen. Euro Yen. All right. We have the same pattern that we see on Euro USD. We have this trend continuation pattern that tells us the market's way too strong. It's pushing the market down. So next candle opens up, you sell, but the market doesn't go down. It goes up. It goes past your resistance line. It goes higher than that. You start freaking out. For those of you who have followed my previous webinars, what do you do at this point when you see the market moving live and it's going against you and it's even gone past your resistance? What does that mean? Do I do anything? Does it mean anything? Okay, I'm testing you guys now. Let me see how much you guys pay attention to my other webinars. Okay, Mark Sanders saying you can wait or bail. Brian, I will go through the exhaustion. In fact, there is another webinar that discusses the exhaustions very precisely. Wasim Khan says, wait till stop loss hits. Rebecca Austin says, depending on your money management strategy. Jay, first answer, that is correct. Jay is saying, wait for the candle to close. Okay. Always remember one rule of thumb. Until the candle is not closed, the candle means nothing. This particular candle that is running right now looks like the market is going to reverse, but I can't tell anything about it until it's closed and I have a certain direction. Because it's moving, and we all know in Forex, things can happen in a matter of minutes. Correct? So if that happens, how do you know if I make a decision based on what I currently see and the next minute or 2 minutes something else changes? Always wait for the candle to close and to make your decision on closed candles. Okay, so by the time the candle closes, the market comes back down and closes here. Now you're smiling. The market's going to continue in my direction. It wants to go short. Boom. The short continues. Okay, let's take a look at US dollar CAD. Now these are supposed to be opposite of what we are doing in the other pairs. So let's take a look at US dollar CAD. Now, let me clean all this for you guys, and there we go. We have a exhaustion here. Next candle we sell. Okay, and this is the opening of the next candle we sell. The market comes down. It touches your support. You close, you make a profit, and that's that. Okay, so you go short and success. But then, by the time the candle closes, you understand that the market wants to go long because it's a trend continuation pattern. Okay, and the market eventually, you see it goes long. It bounced right off of our resistance. It went higher, but maybe looks like it's going to close below it. So that went long, but that's later. That's fine. I'm getting to a point here. Okay, just hang in there. I'm reaching a point where I'm going to show you guys what this all means, how you can put it together, and how you can forecast. Okay, now moving on to US dollar Swiss franc. US dollar Swiss franc now. US dollar Swiss franc, we have an indication that we have a trend continuation pattern for a long based on this candle. Okay, this is simply telling you the market wants to go long. Trend continuation pattern plus the next candle opens up and it goes immediately. The first thing it does, it goes down. You, by the rule of thumb, you wait for the candle to close for it to tell you exactly what it's going to do. It never closes below the resistance, so you know the market's still in your favor. Comes back up, closes as an upside down exhaustion, which means a trend continuation tells you market still wants to go long, giving you an indication that you can hold. We're still going north. Okay, long. So now, what is the overall look that we see here? We have a short, 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 and a long. I have a little confusion here. And New Zealand dollar and US dollar CAD eventually told us that they're going to go in the same direction with the rest. You have an idea in the market right now that things are going to go your way. Now, here is here's the part where you can nitpick the market to precision. Let me get into this, guys. If anybody's confused at any moment, stop me. Okay. Now, Euro USD. Once you see this pattern here, the market was going down, opening up the next candle, you short. The market goes up. Okay, market is going up, reaches this area. Right? Now, at that time, what are our pairs that we had success with? Take a look at New Zealand dollar. Okay, New Zealand dollar didn't tell us the market is going to go down. It actually told us the market's going to go up. What do we have here? Euro USD is telling us short, but New Zealand dollar is telling us long. This is what we call anti-correlation. That's fine. That's fine. It happens. There is anti-correlation all the time. But because you looked at all of these pairs, you know that the overall direction of the market is down. But we have some long in the market. We have some different directions temporarily. What does that mean? New Zealand dollar is telling us that it wants to go long. If you had monitored the market at that moment, the moment New Zealand dollar hit this area, it's the same time Euro USD, it was hitting this area. It is only going, the market is only going to get a better price. That's all it's doing. It's not reversing on you. It's retracing to get a better entry, a better price. As you practice this, you will get more and more precision where when the next candle opens, instead of selling here, what you will actually do is you'll see, New Zealand dollar is actually saying long. Once New Zealand dollar's long is finished, I'm going to sell my Euro USD. Which means you would have entered then around here somewhere, because now it makes sense. This gives you pinpoint accuracy when to enter the market to a point where you don't see the market fluctuating against to even 50 pips. And you're taking 7 pairs, 8 pairs together, and suddenly you see 300, 400 pips on the table right in front of you. Okay? So, when you have a anti-correlation, embrace it with open arms. It's actually telling you, I'm giving you a chance to take a precision entry. Okay. All right. Ahmed is saying, can you repeat, please? Mark Sanders is saying, does anti-correlation result from fundamentals influencing a particular pair? Mark Sanders, don't even worry about fundamentals. No matter what the fundamentals does, at the end of the day, it will come back and follow what the price is originally wants to do. You can see the fundamentals on your charts, like live. Okay? And even with the fundamentals, the market cannot go to a certain extent. It only can go to a certain extent that is planned. Okay? This is not like the stock market, where you can have something crash overnight. No, it doesn't work like that. There's paperwork that needs to be filed and needs to be processed. Everything is planned. Okay, Lisa saying, can I please repeat anti-correlation? Okay, sure. I'll repeat. I'll explain anti-correlation. And Clayton is saying, could you repeat, please? Okay, and I'll go over this one more time, and I'll use different pairs as examples this time. Anti-correlation is simply this. Let me clear all this out. Sorry. Okay. These are the pairs that correlate together. All of these pairs. Basically, what it's saying that all these pairs on top, they go in one direction always, and these two pairs on the bottom, they go opposite always. Take a look at Euro USD. You see how in the last 5-6 hours it's going down? Pound. Same thing. Overall direction is down of the last 5-6 hours. Now, these pairs that go opposite, US dollar CAD, that means the last 5-6 hours, instead of going down, it will go up. There you go. Last 5-6 hours, it's going up. Same thing, US dollar Swiss franc. Last 5-6 hours, it's going up. Overall direction, these guys will always correlate in the long run. Every now and then, in the short term, the immediate short term, you see an anti-correlation where certain pairs are telling you they want to go long, but a correlating pair will say, I don't want to go long, I'm going to go short. That means one of them is going to get a better price. It's going back to get a better price. That's all it's doing. It's going to fetch a better price to fill in. Does that make sense, Lisa? And that's what we call anti-correlation. Okay, good. Mihaly, can we use gold as positive correlating pair? Gold, yes, is a correlating pair that works with these. However, because it's a metal, be cautious. Because gold doesn't have a history of correlating with these pairs in the long run. It's only been having a history in the last 3 months or so. And sometimes it has weeks that it's on and off. But these pairs have a history together going back 2 years, 3 years that they work together. Okay, so